Good evening, everyone, and welcome to tonight's debate on one of the most pressing questions in the financial and cryptocurrency worlds. Will Bitcoin reach $100,000 before 2025? Representing the argument in favor is Max, who believes Bitcoin will hit this milestone. Arguing against this prediction is Sarah, who contends it is engaging discussion. Max, why do you believe Bitcoin will reach $100,000 before 2025?
Thank you, moderator. I am confident that Bitcoin will reach $100,000 before 2025 for several compelling reasons. These include growing institutional and retail adoption, technological innovations enhancing Bitcoin's utility, and its unique characteristics as a decentralized and scarce asset. To start, let's examine adoption. Bitcoin is rapidly gaining traction as a global asset, not just in developed nations, but in emerging markets where economic instability drives people to seek alternatives to traditional currencies. In regions where inflation is rampant or currency controls are strict, Bitcoin provides an expensible and borderless solution. The growing number of Bitcoin wallet users and the increasing integration of Bitcoin into payment systems demonstrate its expanding use cases.
While Bitcoin's adoption has grown, it's important to acknowledge the hurdles it faces. Regulatory scrutiny is intensifying worldwide. Governments, particularly in major economies, are wary of Bitcoin's potential to bypass traditional monetary systems. For example, some nations have imposed strict rules on crypto trading or outright bans, which could stifle growth. Adoption, especially on a global scale, won't happen as smoothly as Bitcoin enthusiasts expect.
Regulations are not necessarily barriers. They can be catalysts. Governments worldwide are working on creating regulatory frameworks to bring clarity and legitimacy to the crypto market. Clearer rules can encourage participation from both institutional and retail investors who are hesitant due to legal ambiguities. Once these frameworks are in place, the influx of new capital into Bitcoin could easily push its price upward.
That's a fair point, but over-regulation remains a risk. Governments could impose restrictions that limit Bitcoin's utility and appeal. For example, stringent taxation policies, transaction limits, or high compliance costs could deter investors. Moreover, central banks are actively developing their own digital currencies, known as CBDCs, which could offer more stability and acceptance than Bitcoin, further reducing its competitive edge.
CBDCs and Bitcoin serve fundamentally different purposes. CBDCs are centralized and subject to government control, while Bitcoin is decentralized, transparent, and resistant to censorship. In fact, the introduction of CBDCs might highlight the value of Bitcoin as an independent alternative. People and institutions seeking financial autonomy will find Bitcoin more attractive, especially in the face of rising concerns over surveillance and control in traditional financial systems.
That's speculative. While decentralization appeals to some, the majority of consumers and institutions value convenience, stability, and government backing, which CBDCs are designed to provide. CBDCs could overshadow Bitcoin as the preferred digital currency, particularly if governments actively promote their adoption and integrate them seamlessly into existing financial systems.
Bitcoin's appeal goes beyond being a currency. It's increasingly seen as a store of value, much like digital gold. Its fixed supply of 21 million coins ensures scarcity, a stark contrast to fiat currencies subject to inflationary pressures. As global inflation concerns grow and traditional currencies face devaluation, Bitcoin's deflationary nature becomes increasingly compelling.
The digital gold narrative is not without flaws. Bitcoin's price volatility makes it difficult to classify as a reliable store of value. Unlike gold, which has a long history of stability, Bitcoin's price swings are massive. This volatility undermines its ability to act as a hedge against inflation or economic uncertainty. Investors seeking stability will likely turn to traditional safe haven assets instead of Bitcoin.
Volatility is a characteristic of any emerging asset class. As Bitcoin adoption increases, its price volatility will naturally decline. Moreover, the potential for high returns outweighs the short-term volatility volatility for many investors. Institutional interest in particular is growing, with major firms exploring Bitcoin as a strategic asset. The approval of Bitcoin ETFs in major markets could unlock billions of dollars in capital, accelerating Bitcoin's price growth toward $100,000.
Institutional interest is encouraging, but it comes with caveats. Institutions prioritize risk management and are unlikely to allocate significant portions of their portfolios to Bitcoin, especially in uncertain economic times. Additionally, broader macroeconomic conditions such as high interest rates and reduced liquidity could limit the flow of capital into speculative assets like Bitcoin.
Economic uncertainty is precisely what makes Bitcoin appealing. With rising global debt levels, geopolitical instability, and persistent concerns about fiat currency devaluation, Bitcoin offers a hedge against traditional financial risks. Its borderless and decentralized nature makes it particularly attractive in regions with unstable currencies or where people lack access to reliable banking systems.
The hedge argument is compelling, but it's not backed by consistent data. Bitcoin's price has often correlated with high-risk assets like tech stocks, rather than acting as a safe haven. If traditional markets face significant downturns, Bitcoin's speculative nature might deter investors rather than attract them. Until Bitcoin demonstrates stability during crises, its adoption as a hedge will remain limited.
Stability will come with maturity. Technological advancements such as the Lightning Network are enhancing Bitcoin's scalability and reducing transaction costs. These innovations make Bitcoin more practical for everyday use, increasing its utility and adoption. As the ecosystem grows, Bitcoin will likely attract more users and investors, pushing its price higher.
Technological advancements are promising, but they face competition from other cryptocurrencies. Ethereum, Solana, and other blockchain platforms offer more versatile functionalities, such as smart contracts and decentralized applications. These platforms are rapidly gaining market share, and investors are diversifying their portfolios instead of focusing solely on Bitcoin.
Bitcoin's strength lies in its simplicity and security. While other blockchains compete on functionality, Bitcoin remains the most secure and decentralized network. Its established reputation and network effects make it the go-to choice for institutions and individuals seeking a reliable digital asset. Bitcoin's dominance in the crypto market ensures that it remains a cornerstone of the ecosystem.
Dominance isn't guaranteed. Bitcoin still faces challenges, including its environmental impact. The proof-of-work consensus mechanism that secures the network is energy-intensive and has drawn criticism worldwide. As sustainability becomes a priority for governments and investors, Bitcoin's energy consumption could become a liability, deterring investment and adoption.
Bitcoin mining is becoming increasingly sustainable. A growing percentage of mining operations now use renewable energy sources, and innovations in energy efficiency are being implemented. In fact, Bitcoin mining can incentivize renewable energy projects by utilizing excess capacity. This evolving narrative will help dispel environmental concerns and enhance Bitcoin's legitimacy.
Even with progress in sustainability, Bitcoin's road to $100,000 isn't straightforward. Reaching this milestone would require unprecedented growth in market capitalization, which may not be realistic in the current economic climate. Bitcoin would need massive inflows of capital, but with high interest rates and reduced liquidity, attracting such investment could prove challenging. Aha!
While economic conditions are challenging, they also present opportunities for Bitcoin. Distrust in traditional financial systems is growing, and Bitcoin offers a decentralized, inflation-resistant alternative. As more people recognize its potential, adoption will accelerate, driving demand and pushing Bitcoin toward $100,000.
Global adoption is a long-term process, not something that can be achieved in just a few years. Moreover, Bitcoin faces competition not only from other cryptocurrencies, but also from traditional assets and government-backed solutions. These factors, combined with regulatory uncertainty and its inherent volatility, make reaching $100,000 by 2025 an overly overly optimistic projection.
Thank you both for your points. Let's move into closing statements. Sarah, your final thoughts?
Bitcoin has undeniable potential as a transformative technology, but its path to $100,000 is fraught with challenges, regulatory risks, competition from other digital assets, and macroeconomic headwinds are significant barriers. While I believe Bitcoin has long-term viability, achieving this milestone by 2025 is overly optimistic. Investors should approach such predictions with caution and consider the broader context of the market.
Thank you. Max, your final thoughts?
Bitcoin is a revolutionary asset that has consistently exceeded expectations. With its limited supply, growing institutional adoption, and increasing global relevance, Bitcoin is well positioned to hit $100,000 before 2025. The challenges are real, but they are far outweighed by the opportunities. As the financial world evolves, Bitcoin will continue to prove its resilience and potential.
Thank you both for a thought-provoking discussion. Whether or not Bitcoin reaches $100,000 by 2025, one thing is clear: it remains a subject of intense debate and fascination, reshaping the financial landscape as we know it. Thank you everyone for joining us tonight.